I want to first of all speak a little bit about the Financial Services Commission. The FSC was established in 2001, and this came on the heels of disruption in the financial sector. Earlier, we had seen certain institutions not doing exactly what they were supposed to do, and so the government thought that there had to be more protection for consumers of the financial services. Hence, the Financial Services Commission was established. The Financial Services Commission regulates and supervises the securities industry. That would include like the Jamaica Stock Exchange. You're going to hear more about that. Securities dealers, insurance companies, and private pensions. The FSC is mandated to provide protection for the consumers of these non-deposit taking financial institutions. Not too long ago, you heard about the Bank of Jamaica, which is the other side of the regulatory coin. The Bank of Jamaica regulates the deposit taking institutions. The FSC regulates the non-deposit taking institutions. And at the end of my presentation, I am sure Bergerman is going to ask you some questions, so you should remember that. And our booth over there, I am sure Tony and Pat, who are manning the booth so ably, are also quite ready to provide you with additional information and to give you some tokens from the FSC. So, the FSC does several things to ensure that you as the consumers are protected. This would include what we call fit and proper assessments. Persons in certain sensitive positions, whether insurance companies, private pensions, or the security dealers. For instance, like life insurance agents who would be advising you on how to invest your funds and would also be taking funds from you for as a premium or your first payment for insurance. These persons have to be fit and proper. What do we describe or define as fit and proper? Fit and proper persons, meaning that you haven't been convicted of any criminal activity that involves dishonesty or moral turpitude, meaning that, there's a little bit of concern about your morals, your people don't trust you. So we want persons in the financial sector to be of good moral standing and not to have been convicted of anything such as fraud. Several reasons for this. In recent times, you'd have heard a lot about the different types of scams being perpetrated on youths and being perpetrated on adults. And I'm not now talking about the lotto scamming, but I'm speaking about other types, which would, like Loom and these other so-called investment schemes. The Financial Services Commission takes a very strong position against all unregulated financial organizations or UFOs. And UFOs not being the ones that, fly around and people, think that they came from Mars or wherever. We're actually talking about now these unregulated financial organizations, UFOs. They set up on social media sometimes. They don't have a defined office. They are not registered with the FSC and certainly not with the Bank of Jamaica. And they are certainly not on the Jamaica Stock Exchange. But you have lots of persons going out and encouraging persons to invest. One of the key ways to recognize these UFOs, these unregistered financial organizations, is by how they sell their product. They will tell you, invest $5,000 and you will get $50,000 back. Invest $10,000 and you will get $200,000. If it looks too good to be true, it probably is too good to be true. There is no legitimate investment that's going to give you these 500% return on your money in a month or in 2 weeks. Not. You know what? How do you create wealth? You create wealth by investing on the Jamaica Stock Exchange. And you're going to hear about that very shortly. That is what we encourage Jamaicans to do. The Jamaica Stock Exchange has been one of the best performing exchanges around the world. So when people talk about, oh, Jamaica is a third world country and nothing much is really happening here, far from it. You have a great opportunity to invest and make money. We also we have a responsibility to encourage persons to be financially literate. We have a responsibility to encourage persons to invest and plan for their retirement. We always say it is never too early to start planning for retirement. Once you have any form of income, you should start planning for retirement. We also encourage persons to invest in the securities market, the stock exchange, securities, bonds, etc. Because while, and my colleague Kevin from the Bank of Jamaica, and they supervise the commercial banks, and we know the importance of the commercial banking sector, and it facilitates electronic transfers and payments. But in terms of an investment, I'm sure we all recognize that investing just in a savings account is really not going to help you in your golden years. Yes, you need to put money in a savings account in order to make payments, in order to save for a rainy day, but you also need to create wealth. So you have to invest in other instruments. And also, it is critically important for you to protect your assets. Once you have started, we all know that, most of us insure our motor vehicle because the law says you have to insure the motor vehicle to travel legally on the roads. If you have a mortgage, you're going to insure your house. But if you build the house from scratch, some persons believe that they don't have to invest in insurance. We are living in a hurricane belt area. It is critical for us to insure our assets. Insurance is a very important service that is provided by and large, by private companies, but we as a government institution recognize the importance of the non-deposit taking financial institution sector and encourage persons to always seek to better themselves. It is critically important for you to assess where you are, where you're going to be by the time you want to retire. Where are those funds going? You don't want to be a burden on anybody. You don't want to be walking up and down Gloucester Avenue or Jimmy Cliff Boulevard or wherever, Sam Sharp Square, and saying, boy, beg you something now, boss, beg you something now, ma'am. Boy, my pension wasn't enough. I didn't plan for my retirement. Or having to depend on Uncle Joe, Cousin Barbara, etc. No. Be responsible, plan for your retirement. Once you start getting any income, 17, 18, 19, and you're getting some money from a little farming, from a job, summer job, whatever, you start to plan for retirement. Ladies and gentlemen, I want to thank the JDIC for this wonderful event. Let me tell you, it has been, I'm really glad to be here, and I wish you all that you all have learned a lot today. Thank you very much.